My dear friends, welcome to Rajashekhar classes. This is lecture number 122. In this lecture, we will try to understand Wyckoff trading methodology. In price action trading, false signals are common. However, by combining price action with volume analysis, we can effectively identify and eliminate these false or fake signals. By understanding the principle of price action and volume analysis as taught by Wyckoff, traders can easily filter out fake signals in price movement and accurately identify optimal buy and sell zones. In this lecture, we will focus on understanding price action and volume analysis, which are key components of Wyckoff trading methodology. Now let us try to understand price action. To begin, let's analyze simple candlestick chart. Each candlestick provides important information about price movement within a specific time frame. Just see this here you have two types of candlestick charts. First one is, I can say, where it is here. If you observe carefully, this is open, this is close, means this is increasing, isn't it? This is I can say this one is highest price, isn't it? Anyway, we will try to analyze. This is close, this is open, means this one is, I can say, it is green candle. Why? Because your close is higher than open, isn't it? In similar manner, this is red candle. We already discussed this one. This part is known as body. Even I can say this part is known as spread. Anyway, we will try to analyze all these candlestick charts in detailed manner. Just see this one, what it says. A candlestick consists of two main parts. First one is body. There is another name for body is spread. The rectangular portion between the open and close prices. Just see in this particular chart, you have a rectangular portion in between open and close. That's why this one is spread, or even you can say it is body. What about wick? There is another one. Wick, even people used to say that is this one is spread. That's what I'm saying. It is a between open and close. Of course, this one is green candle. This is spread, isn't it? In similar manner, just see wick, or there is another name for wick is shadow. The thin vertical line extending above and below the body, representing the high and low prices during that period. Just see wick. This is wick. Yes, this is wick. This one is also wick. This one wick. This one is also wick, isn't it? What is wick? The vertical line extending above the body. This is body. This one is body. This one is above the body. This one is below the body. This is known as upper wick. This is known as lower wick, isn't it? In a candlestick, the upper wick is the section between high and body top, isn't it? In candlestick, what is upper wick? This is upper wick. What is it? Is a portion in between high. This is high. This is body top, isn't it? This is body top, isn't it? Showing how far the price moved above the body. The lower wick is the section between low. This is low. This is section between this is low. Sorry, this is section between low and the body bottom. This is body bottom, isn't it? This one is low. This one is the body bottom. This is known as lower wick. It is so simple, so straightforward. Spread or body, they are of same meaning. The spread forms between the open and close. That's what I'm saying. This is open, this is close, this is spread or body, isn't it? This is open. If it is red candle, this is open, this is close. Between open and close, that portion is known as spread or body. A green or bullish candle. This is bullish candle. Even I can say it's a green candle, isn't it? A green or bullish candle means the close is higher than open. Just see, this close, this is close, this is open. Your close is higher than open, indicating buying sentiment. A red, this is bearish candle or red candle, means the close is lower than open. Where is close? This is close, this is open, means price is decreased, isn't it? That's why it's a red candle. What it says? Indicating selling statement. Now let us consider a typical trading session. The stock opened at certain price. Let me say your stock is opened at certain price. Due to selling pressure, the price falls to a low. Let me say due to selling pressure, the price falls to low. Then buying pressure. Let me assume first what happened, because of selling pressure, it falls to low. Again, the buying pressure. Let me assume now you have got buying pressure because of which pressure? Buying pressure. Let me assume there is a buying pressure. Push the price up to the high. Let me assume the stock price is pushed to this level. Let me say it is high. Finally, let me assume it is closed at certain level. This is closed here. Finally, it is closed at certain level. Now, the distance between the open and close. What is the distance? Just see, the distance between this is open, this one is closed, this distance. The distance between open and close. What is this distance between open and close? That is known as spread, isn't it? It reflects sentiment for that period or that particular stock sentiment, isn't it? Anyway, we will, let us time being just try to understand this portion is known as spread. What is the spread? It is in between, this is open price, this is closed price. It's a portion in between open and spread. Let me say, what is this spread? Green candle. Green candle in the sense this is dominating buying pressure. This is buying sentiment. Why? Because you have green candle. Red candle dominates selling pressure. Here it indicates selling pressure, isn't it? On the screen, let me say, on the screen, we can observe two types of spreads. A wide spread, which indicates strong market sentiment, and a narrow spread, which reflects weak sentiment. This is narrow spread, this is wide spread. This is strong sentiment, this is weak sentiment, isn't it? Let me say, what does it mean? I will repeat this one. On the screen, we can observe two types of spreads. A wide spread, which indicates strong market sentiment, and a narrow spread, which reflects weak sentiment, isn't it? Understanding. Let us just say this is weak sentiment. This one is strong sentiment. Now, let us try to understand the power of the wick. Understanding the power of wicks in candlestick patterns. If we add a stick, just see, this is the body. This is body of the candle, isn't it? If we add a stick, I am adding a stick. What's happening here? You are adding the stick to this body, isn't it? If we add a stick or wick to the spread or body, if we add a stick to the body, then it becomes simple candlestick, isn't it? Is it not simple candlesticks? In candlestick charts, we generally observe two types of candles based on wick size. What is this wick size here? Just see, based on wick size, you can see two types of candles. What is first one? We generally observe two types of candles based on the wick size, isn't it? Small wick candle. Just see, here I have a wick. Here also I have wick. This is small wick. This wick size is small. Small wick candles, what it indicates? It indicates strong and continuous trend. This indicates strong and continuous trend. That is important. Strong and continuous trend, showing that buyers or sellers are firmly in control, isn't it? Depending on the color of the candle. What is about large wick candle? We are saying depending on the size of the wick, there are two types of candles. First one is small wick candle, which indicates strong continuous trend. This is important, which indicates strong continuous trend. Another type is large wick. This one is large wick candles. This is large wick. This is also large wick. Large wick candles indicates a weak continuation, suggesting that price may soon move sideways or reverse into downtrend. This is important. This is weak continued trend. Which one is weak continued trend? Second type of candlestick. What is second type of candlestick? What it says, second type of candlestick means long wick candlestick, which suggesting that price may soon move sideways. Just see like this. What is long? Upper wick is long, lower wick is long, means this may be sideways like this, or this may be downtrend. There may be two possibilities. That's what it says. Large wick candles indicates weak continuation, suggesting that price soon moves sideways or reverse into a downtrend. I would like to emphasize the power of wicks. Whenever you see small wicks, it reflects strong market sentiment. Just see what is here, small wicks. Here small wicks. Here small wicks. Just see first candle. Here you have small wick. Small wick means what it indicates? Strong market sentiment. That's what I am saying. Whenever you see small wicks, it reflects strong market sentiment. A green candle without a wick. This one is, let me say, it's a green candle. If you have a green candle without a wick, also known as Marubozu candle, we already discussed it, is a strong signal of bullish trend, indicating higher probability of further price increase. Similarly, a red candle without a lower wick is a strong sign of bearish trend, showing that sellers are in full control and price may decline further. This is green color candle, have small wick indicating scope of increasing stock. What is this? This is stock. This stock may not increase. Why? Because which has got weak sentiment, isn't it? Well, that's what we discussed. Similarly, a red candle, I can say red candle, whether it is, I already discussed this point. Regardless of the spread size, if candle shows long wicks on either side, you see, long wick on either side. I will repeat. Regardless of the spread size, forget about the spread size. Regardless of the spread size, if the candle shows long wicks on either side, it represents uncertainty and weak trend. So far, we have discussed price action. Just see here, that's what it's happened here. Just see here, this one has got long wick. Long wick means the stock may not increase because of large wicks. That is important. This may not, weak sentiment. Just see, good identification of bullish trend. Why? Because there are no wicks. That's what it says. Possibility of increasing stock. This one is good identification of bullish trend. This one is good identification of bearish trend, isn't it? This we already discussed many times in our previous lectures. Just try to recall. What is this? Possibility of decreasing stock, isn't it? In similar manner, this is bad identification of trend. Big wicks indicates bad identification of trend. This is bad. Here you have got big wicks, isn't it? Indicates sideways. Big wick means what? It indicates sideways. Red color candlestick with big wicks means what? It may be reverse. Even after sideways, it may reverse then increase, isn't it? Just say this one. This one is green color candle with big wicks, isn't it? What does it mean? Possibility of not continuing uptrend, isn't it? Why? Because it is what does it mean? So far we have discussed price action. That is important. So far we discussed price action, but remember, price alone can sometimes create fake signals. If you make use only price, It may generate fake signals. Even within a single candlestick, misleading signals can appear. To understand how to identify and avoid these fake signals and how to use volume analysis to confirm true market strength, we will explore these concepts in the next lecture. Time being, I request all of you to go through all these points so that we'll try to identify these fake signals with volume analysis in my next lecture. Thank you so much.